Super Micro stock is down roughly 30% in the past 5 days. Today alone, the stock is down 11%, hitting $18. The main reason is the deadline for potential delisting continues to get shorter and shorter. And I think investors are just kind of losing hope. So in today's episode, what I want to do is take a closer look at what are some questions that investors might have and just around share my overall thoughts on the overall market right now. So let's take a closer look. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for a special offer at fool.com/Jose and a special coupon for my earnings ebook. Now, let's get started.
I want to thank The Motley Fool for sponsoring this video and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so first, let's just kind of understand the current situation. So today was pretty rough for Super Micro shareholders. The stock closed at $18.01. Down nearly 30% in just the past 5 days. That's about 85% below its March high of $122.90. To put this in perspective, a $10,000 investment at the peak would be worth just $1,500 today. The market cap has shrunk to about $10.5 billion, with the PE ratio now sitting somewhere around 8.98, depending on what financials you trust. But to understand why investors are panicking, we need to look at the ticking clock that's causing all this pressure. First is just the main delisting timeline. So here's where things get interesting. Super Micro has until November 16th. Yes, that's literally in 2 days to either A, file their delayed 10K report for the fiscal year ended June 30th, or B, submit a plan to the NASDAQ to regain compliance. Now, November 16th is a weekend. It would fall on a Saturday. So typically, if it falls on a weekend, there are the potentials that it might actually be pushed off into Monday instead. So something to keep in mind out there, but it's not necessarily true all the times. And obviously they have that 10K filing, but most recently they did announce that they were also delaying their Q1 2025 10Q filing as well. And that's not a surprise in my opinion, because obviously they don't have an auditor. So if they didn't have an auditor to file their 10K report, they're obviously not going to have an auditor to file a 10Q report. Now, kind of speaking of this missing deadlines, let's talk about the big elephant in the room. And like I mentioned, is the overall departure of auditors. The Ernst & Young situation is what really has me scratching my head, and is obviously, in my opinion, the biggest indicator of at least some potential fire here. So Ernst & Young, their previous auditor, resigned in October. And it's pretty unusual, in my opinion, when a big foreign firm resigns and there's nobody else willing to take your place, right? Because in my opinion, if there was no fires to be put out, the first auditor wouldn't leave. And more importantly, if things were super simple, then there would be a line of new auditors that would gladly take a huge paycheck from Super Micro to make sure everything is okay. So now that we understand obviously the situation, let's kind of understand what happens if Super Micro can't meet these deadlines. Well, first, let's break down what I consider this a huge domino effect. So what happens if they are delisted? The mechanics of delisting are actually pretty interesting. The stock would move to OTC or over-the-counter markets, which are normally known as kind of like the pink sheets. But on the bright side, major brokers like Charles Schwab and Fidelity would still allow trading, but with some potential restrictions. I am a Fidelity customer, and for me, I'm easily able to trade over the counter. Trading volumes, though, because of the shift of market and maybe certain brokers not allowing it, could drop significantly. And because of the lower volume, you can also have a higher bid-ask spreads, and that can obviously make trading this company more expensive. But before we all panic, let's remember that Super Micro has been through this rodeo before. And I think it's pretty sad to say that, right? I don't think any company should ever be in this rodeo once. And I don't even know why I'm using the term rodeo. But to be there too in less than a decade, that definitely screams some major red flags for management. But for just a quick history, in August 2018, Super Micro faced a similar delisting situation. The stock actually dropped 15% on the last trading day based on an article by Barron's earlier today. And they also mentioned that between the delisting in 2018 and the relisting that took over a year, it came back in January 2020, the stock actually rose 733%. However, there are some key differences this time. One of the major, in my opinion, is this is a much larger market cap than it was before its previous listing. So obviously, with the smaller one, you tend to have a little bit more volatility. Not with and with the bigger one, you're probably gonna have a lot more pressure. The company wasn't as critical to the AI infrastructure boom, and maybe investors might just get, hey, look, we'd rather go away with some other player instead and continue to sell our shares of Super Micro. Speaking of AI infrastructure, we really can't ignore the NVIDIA factor in all of this. So right now, the relationship with NVIDIA is crucial here. Morgan Stanley analyst Eric suggested that NVIDIA might, and this isn't confirmed, but suggests that they might redirect GPU shipments to Dell or any other AI server makers amid this uncertainty. Because what happens is Super Micro has to close down or has to halt some production or can't pay for its chips. It's for the best interest for NVIDIA to be sending out their chips elsewhere. Now, again, it hasn't been confirmed, and in the most recent Super Micro earnings, they mentioned that NVIDIA has not shifted allocations, but how much can we trust Super Micro? Now, NVIDIA's earnings are coming up on November 20th, and we could get crucial insight into this, into either whether NVIDIA is actually redirecting orders, the impact on AI server supply chain, and potentially market share shifts to competitors. Now, while we wait for NVIDIA's insight, Super Micro has provided some updates of their own. First, they do have a special committee findings, and the company recently announced that it completed the initial investigation. They found no evidence of fraud or misconduct. They confirmed that the CEO didn't influence the audit committee's investigation, and it's recommending undefined remedial measures. Finally, they do expect to complete their full review soon, but that was supposed to happen, I believe, by this week or next week, and we still haven't gotten the full review yet. So where does all this leave investor? And let's game out the possible scenarios. So we're going to look at the best case, the worst case, and somewhere in between. The best case is NASDAQ accepts their compliance plan. They get a new auditor appointed within weeks. Remedial measures focus on internal controls and nothing crazy. NVIDIA maintains partnerships. No major financial restatements needed. And the Department of Justice investigations concludes with minimal findings. Now, this is probably the worst case. Delisting occurs, which forces selling by institutional investors, as mutual funds and ETFs often can't hold over-the-counter shares. So there's going to be a huge selling pressure if that happens. NVIDIA confirms order redirections. Department of Justice investigations leads to significant penalties. Restatement of financials are required, and customer confidence erodes. Now, there is a medium case as well. Temporary delisting while issues are resolved, minor financial adjustments require, partial loss of NVIDIA allocations, and moderate market share loss to competitors. Now, I just want to share my thoughts. Look, Super Micro is in a growing market with a strong demand for AI servers. Their preliminary Q1 numbers showed impressive growth. But, and this is a big but, when a company can't get its financial statements audited, that's a red flag you can't ignore. The fact that no major accounting firm has stepped up to replace Ernst & Young is, in my opinion, very, very concerning. For investors considering this stock, remember that this isn't just about buying the dip. This is about fundamental trust in financial statements. Sure, the stock could bounce back like it did in 2018 to 2020, but the most telling indicator for me is the auditor situation. In my years covering semiconductors, I've seen companies face all sorts of challenges, but when no major accounting firm wants to touch your books, well, that's a massive red flag. Well, that's it for today's episode. Take care and see you for more semiconductor and AI news. Oh, and don't forget to check out the pinned comment for our special offer at fool.com/Jose and a special coupon for my earnings book.